Welcome to the Salt Sideline Report. I am Leanna Haakons, and we are here at Salt, New York with Sean Bill. He is the CIO of VTA, and he is also the founder of ReCurve Ventures, a VC investment fund. Very interesting stuff. Welcome.
Oh, thank you. Great to be here. Really excited to be back out in the conference circuit, and first one in the last 2 years. So
it's nice to be back in real life, face to face, isn't it?
yeah, and New York is definitely going off, and people are out and about, and having dinner on the sidewalks, and it's been nice to be out here.
Yeah, it's nice, and we're glad to have some West Coast visitors. So you're busy over in California. Yeah. You are managing CIO at VTA, $3.5 billion pension fund. You've been involved in that space for about a decade. You've been with VTA now, and you're also getting into VC. But let's talk about VTA first, and then we'll touch on your projects at ReCurve. So what are you doing at VTA right now? Yeah,
so at the VTA, I kind of like to frame it as, we're kind of a entrepreneurial mindset with institutional resources. So we're trying to find opportunities where they're less crowded, where there's opportunity to get some extra alpha. One of our big recent splashes in the markets was with Bitcoin. So I think we're the first U.S. public pension plan to come out and announce that we had a Bitcoin position. It was through Skybridge. Mm-hmm. And that's worked out really well. Our average price in at 18,000. So wow. People are pretty happy, and I think we're very interested in what's happening in DeFi and the blockchain more broadly, and trying to kind of expand our outlook on that and maybe eventually invest in that space.
So obviously, Sean, you have a big interest in fintech and the blockchain and different technology areas, especially things that have probably been put forward a lot in the last 18 months with all of us just working from home on our computers. At ReCurve Ventures, you really like to focus on fintech, if I'm correct.
That's right.
You've had some major gains in this space. Tell us about some of your successes at ReCurve and what you're interested in in the VC world.
Yeah, so I started investing in fintech back in 2014, really just because I felt like I had a deep domain expertise in the space. So being at the VTA, we see a lot of deals, right? People want to show you stuff. Obviously, it's not necessarily a fit for a pension fund. This is seed investing, Series A investing. Mm-hmm. I did a lot of investing off my own personal balance sheet. And then eventually started syndicating deals on Angellist. So one of the early deals I did was in AutoFi, which does basically provides loans to auto dealerships. A deal that I did in 2016 was QSKI, where I did that at 10.5 million pre-money. They're currently raising at 625 million, $100 million rounds, and we're doing the pro rata there. So that's a really interesting story in Mexico, basically trying to democratize access for kind of the consumer to finance, because about 60% of the Mexican population is unbanked. Wow. And they have a great app that basically says, hey, if you need a micro loan, we can lend you money and you'll build up a credit history with us. And if you get a job and you do have a bank account, they will lend against your paycheck, so you can disintermediate the payday lenders and really drop the interest rates down tremendously. But they also do buy now, pay later, which is a huge growing segment for them, growing at about 47% per month. So big business, and reflected in the valuation. Very, very, very bullish on that company.
So we've seen a lot of technologies like what you just mentioned, especially in the last 24 months, 18 months during COVID-19, of technology startups and fintechs that are helping the underbanked and unbanked communities domestically in the US, but internationally around the world for the hundreds of millions and billions of people that don't have access to international banking and repatriation payments to go back home to families and things like that, micro loans in Mexico and other areas. Is that sort of your favorite space of fintech and innovation? Or what would you say, if you have a favorite, probably difficult to choose in the VC world and that fintech area?
Well, I kind of think, like, if you think about fintech and, kind of take a step back, there's kind of four legs to the chair, let's say. You have the internet, which gives you, instant communication for free anywhere in the world. You have the cloud, which gives you massive computing power on AWS or whatever, anywhere in the world, right? And then you have our mobile phones, which means that it's with you wherever you are. And I think the next big revolution we're going to see is going to be with fintech kind of becoming almost ubiquitous. So when you call an Uber or a Lyft, and I prefer Lyft because I was an investor in Lyft, when you call Lyft, you don't think about the financial transaction that's occurring. You just click where you want to go. It has your dollar amount. You click through and then you don't think about it. I think we're going to see that only get bigger and bigger in other areas. I'm really, really, really bullish on the DeFi space, what's happening with Solana, what's happening with the Ethereum network. I think that we're going to really see a massive disintermediation of the financial intermediaries. And I don't think that, they really see it yet. I think that this is really just getting started. If you look back at the DeFi space, a lot of these companies didn't exist 3 years ago, and they're just like sneaking up on everybody. So a great example, if you look at Coinbase, which was founded 10 years ago, a centralized exchange, 3,500 employees. You look at Uniswap, a DeFi protocol, smart contract based, that was founded 3 years ago by 11 programmers, and it does 50% of the volume of Coinbase. 11 people versus, 3,500. So, when you extrapolate this out to banking and finance and JP Morgan and Bank of America and all those other guys, I think they have a rude awakening coming, and I'm trying to figure out how to surf that wave with my fintech investments.
So how, with your fintech investments at ReCurve Ventures, where do you get your insights from for that initial idea of that's a space that I want to be invested in with my money at ReCurve?
A lot of reading, a lot of research, a lot of meeting with founders. Certain things were not necessarily possible, 5 years ago that are now possible today. So I'm trying to find things that, for example, the marketplaces on the DeFi networks 5 years ago just wasn't really an option. Today it is. I think that there's going to be an acceleration of this going into asset management, into banking, into consumer finance, all these other areas where we're basically going to see a disintermediation of these financial intermediaries. So where do I get the ideas? A lot of it comes from my background being, on the floor of the Chicago Board of Trade, watching that go digital, then going into the bond trading business at the hedge fund world and seeing how the cash bond trading went digital, and with market access and TradeWeb and Bloomberg Tradebook, et cetera. So, just kind of having learned from those experiences, I think everything's going digital. There's a massive amount of leverage when you're using software, right? You have almost a zero net marginal cost. So when you think about, like when you're a user of whatever, Salesforce's CRM costs so much to create the CRM, and then every marginal unit is pretty much a negligible cost. So there's massive profit opportunities in these things. And if you think about where do you get kind of poor service at a high cost, the financial sector is really got a big bullseye on it. It's very expensive and services lacking. Like if you go on, it's a great slide on Wells Fargo. So, a small business guy goes to Wells Fargo to get a loan, and it says, hey, you have to go into a branch and you have to open an account and have an account with us for a year before we can give you a loan. It's not the case if you're using Aave, Compound, or any of these other protocols.
Right. And so you were saying also when we were discussing earlier about how you actually get access to invest in some of these deals that you do your due diligence and all your research on, get the insights, is a lot of them are listed places like Angellist that really like retail investors and institutional investors and people with bigger tickets can both get in on these opportunities. So do you see opportunity in the things that you're investing in for at-home investors as well?
Yeah, I do list almost every deal I do on Angellist. So unless the founder says no. So if I'm investing my own personal capital, I always put it up on Angellist. So I've done about 15 transactions on Angellist since 2015. IRRs in the 30s for the return. And the TVPI is like 2.6 right now. And that's not including a markup in QSKI from 10 million to 600. It's not including Chooch, which is another great AI company that I invested in at 10 million. Did the follow-on pro rata at 200 million, and it's now currently traded at 600 million in the secondaries. So it's undermarked. The great thing about Angellist is it's the democratization of access, to these types of investments for accredited investors. So Silicon Valley and the venture capital, world is pretty clubby, and it's generally a pretty big minimum ticket size to get involved. Angellist, you could be investing in startups for $1,000.
Exactly.
Yeah.
So can we follow you on Angellist so we can see what you're investing in?
Yeah, you can back my syndicate and participate in the syndicate, and you'll see everything I'm doing.
Wow.
Yeah.
Well, that's Sean Bill, and that's the next place we're probably all going to go after this video,
Thank you.
following you on Angellist.
Thanks a lot.
Thank you so much for your insights today. You're an expert in your field, and we're so happy to have you here at SALTNY New York.
Yeah, thank you for having me. I'm really enjoying the conference.
Wonderful.
All right, thanks a lot.